Welcome back, folks, to Investor Diaries. Wish is an American online e-commerce platform for transactions between sellers and buyers. Wish has been all over the news over the past few years. In fact, ever since it went public. The Wall Street bets crowd loved Wish stock last summer. However, the community has turned its attention elsewhere amidst its unrelenting decline.
But at less than $2.5 per share, is this finally the time to give the firm another chance? Now, what is this company all about? What have been the recent turn of events for Wish? Does it even make sense to invest in this company? Should we buy, sell, or hold Wish stocks? Let's find out in today's video.
Wish is operated by ContextLogic in San Francisco, United States. The Wish platform personalizes the shopping experience visually for each customer. Rather than relying only on a search bar format, Wish further works with payment service providers to handle their payments and does not stock the product themselves or manage returns.
There's no doubt that the stock has had a highly volatile ride ever since it went public. Wish stock hit NASDAQ with high hopes in 2020. But early 2021, shares had soared to $32 a piece as traders rushed to buy what seemed like a clear e-commerce winner. However, it's taken a dip and it's not gone just below $5, but it's actually gone below $2.5.
So after hitting $32 a share, everything went south for Wish. The company's rapid revenue growth abruptly reversed. The management team, which seemed so smart, now appears to have made a lot of blunders. And in any case, the CEO is exiting the firm.
So what's really wrong with this company? Now, in a nutshell, it's a discount marketplace, but it is facing major problems that has engulfed from all directions.
So when Wish went public in December 2020, it served over 100 million MAUs or monthly active users. This mainly enabled Chinese merchants to sell their products to overseas buyers.
Wish sold many of its products at lower prices than regional marketplaces like Amazon, but customers had to wait much longer for their products to arrive. Wish's dependence on Chinese merchants also exposed its shoppers to low quality and fake products, and it took a long time to process returns.
When Wish went public in December of 2020, some investors were willing to overlook all of the flaws that Nitish you spoke about and focus on its growth in monthly active users or MAUs and revenue. Unfortunately, its revenue fell sharply over the past 3 quarters, and it ended the third quarter with just 60 million MAUs.
Wish's last 12-month active buyers also fell 32% year over year to 46 million during the third quarter. It attributed its ongoing loss of active users, which it expects to bleed into the holidays, to lower spending on digital ads.
Wish has come out in the public and said that it's reining in its marketing efforts to cut costs and focus on retaining its higher value users with new features. And these new features essentially include its shoppable Wish clip videos, its new buy now, pay later options with Klarna, and its Wish Standards program, which rewards its higher quality merchants with lower commissions and prioritized product listings.
But let's be honest, we at Investor Diaries are still very skeptical that any of these efforts will stop Wish's bleeding. Wish has traditionally relied on bottom fishing bargain hunters, and it seems highly doubtful that new videos, payment options, and stricter rules for merchants will keep them locked into this marketplace.
All of the new strategies that it's actually adopted over the past few months, it seems a long shot to me to expect that Wish is going to overcome all of its problems through the 3-4 different strategies that you were speaking about. Now, on that point, the backbone of Wish is pretty clear, that how much of sale goes through its platform. And in this case, the sales trajectory is unclear.
So Wish is owned by its parent company, ContextLogic. The downside of reducing advertising spend is that it cuts off ContextLogic's growth path at its knees. Until this summer, investors had viewed ContextLogic as a steady growth story. Sure, there might have been modest deceleration of growth as stay-at-home tailwinds diminished. However, no one expected ContextLogic to not be able to grow anymore at all.
And yet, just a couple of quarters later, not only is ContextLogic not growing, it's actually seeing a sharp decline in revenues. And for these fast growth companies, if revenues are declining, it actually signals the end of the company. On that note, in the past quarter, ContextLogic brought in just $368 million of revenue, which was a 39% year over year decline.
And things are about to go from bad to worse. In the company's Q3 earnings press release, it warned that, quote, "We are not providing Q4 revenue guidance. We expect Q4 revenue to be below Q3 despite the holidays." Further to that point, ContextLogic noted that revenues have trailed off roughly 20% in October versus the Q3 levels.
So, Nitish, this points to the company only producing something along the lines of 300 million of revenue per quarter going forward, or 300 times 4, which is $1.2 billion of revenue annually. Meanwhile, the analyst consensus estimate is still $1.8 billion of revenue in 2022, followed by a rebound to $2.5 billion in 2023. And I don't think that Wish is anywhere in its path to meet any of the analyst expectations.
That's right, Appy. The future does not look very rosy for Wish. The CEO is leaving amidst unclear business strategy, and that causes some major problems and anxiety for investors.
So let's try to put all of this into perspective. Today, there are a million online shopping apps. A company needs something unique or innovative to make itself stand out from the crowd. Now, at the time of the Wish IPO, the company's superior algorithm was supposed to be its competitive advantage. Now, ContextLogic, which is again the parent company of Wish, had the secrets to understand consumer behavior, or at least the investors thought of it, and therefore they pumped money into Wish, which sent the stock price soaring high.
However, ContextLogic's 2021 operating results clearly called all of that into question. And if you just needed another red flag, just look at the executive suite.
Very recently, founder and CEO Piotr Szulczewski announced that he'll be stepping down in early 2022 as soon as a replacement can be found. Now, Nitish, it's never a great sign when the founder of a firm steps aside. And that's specifically true when a company's stock price is at an all-time low.
Now, let's examine, is there anything positive amidst all these bad news for Wish? On an adjusted EBITDA basis, its loss of 30 million marked a significant improvement from a loss of 64 million a year earlier.
One of the other things is we don't think Wish is going to run out of cash anytime soon. Now, it ended the third quarter with $1.2 billion in cash equivalents, and marketable securities. And it expects its free cash flow to remain near break-even levels this year. However, having seen all of these positives, I think that the positives are quite low when I compare it to the serious challenges that the company is facing over the longer period of time.
So in conclusion, what is Investor Diary's recommendation? Sure, you cannot fully discount the company's chances of making a comeback. The new incoming CEO could have the skills necessary to fix ContextLogic's broken business model. But until we know who is really taking the helm, there's no sense getting into Wish stock. What's more, insiders are dumping shares, signaling that they have little confidence in a turnaround as well.
So we'll be pretty clear with our recommendation here, folks. Betting on Wish stocks as a long shot turnaround play or even as a takeover target, it's a huge gamble. And there are plenty of other stocks that we've already recommended in this channel that you can buy. So please do not buy this stock. Please do not get into this stock at this point of time.
And yes, for sure, it can go down further and it can go down to nearly zero. There's a lot of uncertainty surrounding this company and the troubles do not seem to end. We are really staying away from this company and we recommend that you stay away from this company as well. That's a wrap for today, folks. Do let us know your thoughts and comments on Wish stock and whether you are holding or selling Wish stock. Until next time, stay tuned and stay focused.